Alright, good afternoon guys, and welcome to this Periscope here. So where we're going to start, very briefly, it's not going to be too long. What I want to do is I actually posted this a bit earlier. I'm just going to quickly move this ladder up. So what we're going to talk about is effectively this little tweet I posted. Now, all I want to say with regards to this is what you need to understand as a trader is that in essence, if you go through the three blocks of sort of identifying opportunity, the first thing that comes is obviously pattern recognition. Now, anyone can identify these patterns, whether it's a trend line or a moving average or whatever it may be. Anyone can recognize these these patterns, but a pattern on its own is not an edge. It's merely a reference point. It's a way in which to reference yourself against a potential direction in the market. And the most important thing to understand is that you need, at the end of the day, you need a buyer and seller. And I think as retail traders, or even when I started trading, that's the first mistake we make. We assume that because there's a level of support or a trend line that a buyer or a seller will initiate and influence the market at that price, and that's not the case. So the first thing is pattern recognition, but that is not an edge. So we then move on to the second leg, which is price action. Now, this is probably the single most important edge that particularly day traders have and professional traders, and there are a number of reasons for this. And I'll highlight them here, but also when we go through a level, I'll highlight them a little bit further. Now, the important thing to understand is that in terms of price action, because it's a leading indicator, in other words, it's information that's in the present. It's not so much a lagging sort of information like a moving average or a support might be. It's what's physically happening at that time in the market, and it tends to give very early indications as to what could occur later on down the line. Now, we will go through the reason why this is the edge in a bit, but let's just move on then to the technical confirmation. Now, this is the part again where a lot of retail traders partake, and this is the point where the market signals, for instance, that a top is in place or that we've got a break in a trend line or a break of support. And that sort of technical confirmation can come in a number of different ways, and that could be off the charts, it could be off the volume, or even a change in the price action. So that again, that's more of a retail trader sort of type area, and where the retail traders tend to do well. Now, the reason why why this is effectively, in essence, for lack of a better word, the holy grail is very simple. Is because as a day trader, if we can identify, for instance, where a seller steps in using price action, we can then position ourselves early enough into a trade, and so that once it effectively shows us confirmation, we can then be adding onto the trade and be managing our money. And that's what that last block is about, and that's probably the most important block. The edge for professional traders is very simple. It's money management. In other words, the fact that we get better price execution means that when the market actually starts to show itself and the trade starts to play out, we're not then taking profit, we're actually looking to add into a trade, and that's how day traders can get relatively big, using relatively good risk-reward metrics. And then obviously, in terms of managing risk, obviously if you're getting better price execution, it means that in the long run, your risk-reward is going to be a lot more favorable, but also you're going to be taking on a lot less risk. So effectively all price action is it's giving you an early lead or an early indication as to where an area of buyers and sellers might step in. So that's the basic grid. I have put that up on Twitter if you want to take a picture of it, but let's now apply that. Let's actually get this into the market and see how this all works out. So the first thing we're going to talk about is the Euro Stoxx 50 from this morning, and the reason being is because the Euro Stoxx actually showed a very unique pattern with some strong price action and then a very, very nice technical confirmation. So it's done all three of them, and what I'm going to do is I'm going to go through. I'm just going to turn this a little bit further sideways. So the first thing we want to note is if I get a profile up of the Euro Stoxx 50 from this morning, now what we want to point out effectively was what had it occurred this morning. So initially the market sort of opened up at a range, came lower, tested in some sort of buyers, tried to find out where those buyers were. The buyers then responded, they left that nice little imprint tail, and they started to push prices back up towards the page. Now, ultimately what we saw was the market then almost did a little bit of an 80-20, where it closed back inside the previous day's value area before then testing the other side of the value area. Now, because of the move, because of a number of reasons, there was a pattern recognized whereby effectively, because we had moved from the low of the value area from the previous day to the high, buy in a straight line, you know, you tend to get some sort of a little bit more two-way trade once we retest the other side of value. Now that's effectively the pattern. Now, you know, you can, and you will see in the video, you can sell that. Yeah, okay, you can go blind and sell 29.33s and hope that it works, and you know, but in this case you'll see as we go through the price action, it actually took a good sort of 45 minutes to an hour for the trade to play out, and more important, pay out. So the pattern was recognized, but just selling, that's not enough, guys. You know, it could have just as well gone higher and stopped out everyone, and the trade would never have worked. So identifying a pattern is important because it gives you a reference point, but then using price action, that effectively gives you the opportunity you know, to get in. So that's the first thing, is recognizing the potential pattern. The second thing then is the price action. So let's actually move into the Euro stocks. Let's have a look at the ladder and see how this actually played out from this morning. Now, what I want to just point out is effectively the level we're looking at is the 33s. And if you were watching this closely this morning, you would have noticed that as we were coming up, and I'm actually just going to rewind this a little bit fractionally here. So you would have noticed as we came up to these 29s, 32s, what we effectively did was, I'm just going to zoom in a bit further. Okay, so the market effectively sat on these sort of 29s, 30s, 31s and 32s for some time, churning out volume. Actually, I'm going to zoom out so we can see the clips going through as well. Okay, there we go. Alright, so effectively what we're going to see here, once we trade these 33s out, is we're going to see a little bit of change in the price action. So the market was kind of grinding up at this point, not doing a great deal, you know, so the volumes weren't high or anything like that. You know, we saw a little bit of two-way trade. We can see there obviously someone took 8,000 at 31s, and there was still sort of someone sitting on the bid trying to lift up prices. So we lifted up the 2s and 4 lots traded at the 3s. Now note, we had a reference point at 29.33s, not a level, not a resistance. We had a reference point, a point we referenced, and we want to watch and see what the price action did at that point. Now, first thing you need to note is that the market sort of kind of just sat off those 33s. Not a single seller wants 33s trade. However, the minute we traded the 34s and traded 4 lots, the market went back off it at 33s. Now let's watch this quite carefully. Okay, so we can see immediately the market sells to 33s and someone loads 200 at 33s. Okay, so what you want to point out now is that got filled, so someone just lifted 33s and we got another reload there. Okay, so 33s got lifted and it reloaded. More importantly, once it reloaded, we sold into 2s. Okay, so we're going to continue that on. So now we can see 2s is offering, 2s is offering. So we can see someone buying the 2s. We can see a little bit of a buy side on the 2s. So a buyer steps in, lifts the 2s, and instantly we get another reload on the 2s. So straight away what we can see here, we can identify, and you'll see this continues all the way down. So again a reload on the 2s, and instantly the seller hits into the 1s. So we can see a buyer trying to lift 2s, we can see the buyer interacting again. But ultimately, what's happening now is we've got a seller that's stepped into the market, he's accepting any buy orders, taking the buy orders. Once the buying stops, he then sells into the next best bid. Again, 31s now is filled. Note how the offer goes nice and firm, yeah? So the seller effectively waits for someone to buy up. And then, when there's no more buy, the seller then goes back to the market. So again, another reload 31s. We can see up at the top here, someone sold another 1,000 at 31 and reloaded 31. So we can see someone still trying to buy 31s. But ultimately now we can see that the seller is effectively initiating sell-side orders. So that's the first little response, guys. That's the first bit of change in price action. And you've been watching this very closely. You would have seen how quickly the price action changed there, where we stopped seeing that grindy type price action, and we actually saw a seller come in, hit the offer, or sorry, hit into the bid, reload the offer, hit into the bid, reload into the offer, hit into the bid. Now, that's the first little piece of information. So that in its own, guys, that's not enough. That's just telling you that there is a relatively strong seller that's entered the market. In other words, the price action has now changed in the market. So let's then continue on. Now what I'm going to do is I'm going to just quickly take you back to the charts and show you why price action is so much more important effectively than the chart itself. So if we go back onto the chart now, I'm just going to zoom this out. So the first thing to understand is that as we're coming up this morning, the market, once we broke up to the initial balance high, you can see the market we saw some very strong initiative buying coming out, once the Euro stocks broke out of its, initial balance high. And the most important thing is, when we broke out, if you were to go and look at the volume structure, the volume really picked up quite aggressively at this time frame. Now, basically what you're looking at here is just a 5-minute representation of the way the bids and offers traded over the period. Now, what I want to point out is effectively what the price action does once we get to a specific reference point. So again, note, this is our reference point, our 33s. It's not a level, it's a reference point. And we can see that the market actually sat, if you count these bars, it probably took about 45 minutes where the market sat in this very, very sort of consolidated area between 27s and 33s. However, what we did get, and when the sell signal came, was, as you can see, if you look at these 3 bars here, over a period of 15 minutes, someone kept reloading these 27s, and we're going to look at this on the price ladder again, but someone just sat there. It was a buyer that sat there, and he kept accepting all the sell side orders going through on these 27s. Once the 27s got traded, the seller then continued back down and became more aggressive all the way down the page. So we're going to take a look at that now. I'm going to show you what this buyer looks like at these 26s and 27s, how he absorbed, and then we're going to fast forward and see how it responded once that buyer had finished his order. So let's move back onto the ladder again and let's watch this out. So if we fast forward this a little bit and come back down to the 27s. Okay, so this is our first little test of 27s, and now I'm going to zoom this in quickly so we can watch this quite closely. So this would have been the sort of second test of 27s. We've come down the first time, and again, guys, I'm just going to fast forward this, but if you go back and you watch this ladder, and I'm sure Milto will hopefully put this up on the, especially for the guys on the price ladder action, course that Milto is doing. This is what, this is the kind of thing you want to practice. You want to identify, how the interaction between the buyers and sellers occurs. Now, what you'll see here effectively is these 27s, someone just kept selling into them and selling into them and selling, and they were real orders, but the buyer kept reloading. Now, that in its own, if you're short, is a problem, because at the end of the day, so long as someone's buying the market, prices aren't going to go lower. So what you have to try and identify is at which point is that buy order done. So as we can see here, first time around, the 27s got traded and they got reloaded again. So there is a seller, he sold 500 into 27, but the buyer just reloaded and left the dates. Okay, so that's the first little sign that there was a buyer sitting at the 27s, and the market, note, went back up to 31s again. So we came down again a second time. Note, again, let's go back and frame there. So the market comes down again, comes down to the 27s. Okay, note the seller, so note the interaction. If I show you the volume going through, you can see there's some real chunky volume going through here. So there is a seller, again, seller sells into the 27s, so he does 281, another 100 into the 27s, another 50 into the 27s, another 150, another 400 into the 27s, and we're constantly seeing that 27 reload. What happens? The seller identifies as a buyer at 27s, and what does he do? He'll stop selling and the market will go back bid again. Why? Because there's a buyer in the market filling out an order. So again, the seller notices that, he pulls his offer away and the market goes bid, bid, bid again. Okay, so this occurred for almost 15 minutes with someone just sitting, filling out an order at 27s. Now, let's fast forward this again and have a look what happens the first time the market trades more than 100 lots at the 26 area. So note, we said we had a very big buy sitting at 27s. Now what occurs once the market takes out the 27? So Yowie, let's go back a sec. Okay. So let's have a look. Now note, in all 3 other instances, every time we came down to 27s, it got reloaded and the market went back bid. So let's have a look here. Now what happens when the 27s get traded and they don't reload? So we get a reload the first time, reload, reload, reload. However, this time, what happens? Okay, the buyer suddenly stops reloading the 27s, and suddenly the seller goes very firm on the exact price that the buyer had been holding for almost 15 to 20 minutes. Note, no reloads, guys. We saw about, 7 or 8 reloads over the last 15 minutes. That's the first time we no longer have a reload. Okay, now, that's the second clue. In other words, this is about now, if you're sort of just a retail trader, you will effectively be getting a signal to sell at 25, 24, 23. If you're trading price action, you're short in ahead, looking to now add into the break and the follow on. So let's have a look now once the first clip goes through. So the first time, 62 lost trades, it says 26s. Again, we saw a little bit of a lift at 27s, but note what happened. Instant reload on the 7. So the price that was being reloaded by buyers is now being reloaded by a seller. And another reload at 27. Okay, let's see what happens now once the seller realizes that the buyer has now completed his order and he finishes out his order to the downside. Okay, another reload at 27s. Okay, so what was support at 27 for buyers now becomes resistance for sellers. Okay, another reload at 27s. Okay, another 100 lots bought at 27 and the seller's happily sitting getting filled at those 27s. But eventually he becomes a little bit tired and he then goes to the market. Come on. Okay, again, another reload at 27s, guys. 3 reloads at the 27s when we had 8 reloads on the bid side previously. Okay, so clearly we can see now support has now become resistance. A little bit of selling into the 6s, a little bit of selling. Come on. And 6s trade, 5s trade. Okay, note, no more buying now, not a single buy clip going through. 4s trade. Okay, note, no buying, 4s trade, 5 offered, 4 bid, 4s trade through, 3s trade through, 2s trade through, and ultimately we just continue to offer down the page all the way down towards these 14s area. Note, guys, the change in price action. Note how direct the market's become now. We went from two-way trade above 27s, trading between 27s and 31s. We took out the 26s and the market offered to the downside. Now, that's pure price action, okay? Now, where I'm going to leave you with all of this is, it's very simple, is that price action gives us that early clue so that we can effectively be looking to sell into the 6s, sell into the 5s, and be aggressive where retail traders are going to actually only start entering, right? And all that allows us is that allows us, for one, to take a much smaller stop if we get it wrong, and two, it allows us to make a lot more if we get it right, so we can leverage up a lot more aggressively, when we write using price action. So that's the major difference between, the way the retail traders will execute and the day traders. The last thing I want to leave you with is very simple, okay? Note, we spoke about how 26s, 27s was that area where the market effectively had a buyer turn into a seller. Now note what happened the very first time the Euro stocks went back to retest those 26s. So that little dotted line there, that's your 26s. As you can see, that was the high tick before the Euro stocks offered over and started to rotate lower on the day. So keep that in mind. A little bit of a trade setup, a little bit of a trade play there for you guys. If you have any questions, I've got 2 minutes to answer, so go for it, shoot away. And yeah, just to finish off, if you obviously haven't if you haven't had a look at Milto's course, guys, all of this is dealt with in it. It's a fabulous course. It really, really is. I mean, price action is the key. If you're serious about your trading, it's just going to add an edge to your trading. It's going to add something that most retail traders do not have at this point. So, if you are looking to get seriously into your trading and actually want to become profitable, that's a great course. He's done it absolutely brilliantly, and you're going to see things just like this in that course. More importantly, though, you're going to get to practice those things. You're going to get to practice exactly what I've just showed you here, on the markets, and hopefully become pretty skilled at it. All right, if there's no questions, we'll give it another minute in case there are any questions. It looks like think everyone's done there anyways. Okay, so go have a look at that. If you have any questions, you've got me on Twitter. You know, if you want to talk to Multa about the course, give him a call, guys. You know, just, you know, at the end of the day, trading is your career, you know, so, you know, make the most of it. You know, you've got to do whatever you can, you know, to find an edge in this job, because, you know, that's what trading is about, guys. It's all about edge. So go find that edge. Otherwise, good luck for the rest of the day, and we'll catch up again next week.